Good morning, friends. This is People's Advocate Sriman Narayana Malla coming in front of you to discuss about the group audit. Group audits. What is the learning objective of the group audit? Understand the concept of the audit. Understand the concept of the audit consolidated financial statements. Identify the responsibility of the parent and auditor in consolidation of financial statements. Recognize the manner of the permanent consolidation adjustments and current period and consolidation adjustments. Learn the reporting requirement as per the given circumstance and understand the audit of group financial statements, including the work of the component of auditors. Understand and interpret standards on auditing 600 using the work of another auditor. See, the chapter overview, group audit overview is just 1 minute, friends. ఏమైనా చేయగలవు. See, chapter overview will discuss auditor consolidation financial statement, responsibility of the parent company, responsibility of the parent company auditor, and audit consideration and consolidation, permanent consolidation adjustment, current period consolidation adjustments. Understand, my friends? Are you understanding what I'm talking? Are you okay? What I'm telling? See, Audit of consolidation financial statements. Responsibility of the parent company, responsibility of the auditor, audit considerations and consolidation, permanent consolidation adjustment, current period consolidation adjustment, management representation, reporting, and standards on auditing 600 using the work of another auditor. This is the overview of the group audit. Okay. For example, if I take one example, CA Vikram is a statutory auditor of a manufacturing company whose financial statements are required to be prepared in accordance with the requirements of IND-AS. As the time of planning of audit of current year, it is noticed by him that said company of which he's a auditor has purchased shares of another company located in USA. He further inquired from the management and found that all shares of the US based company were purchased by Indian company. Section 129 of the Companies Act immediately came to his mind whether the provisions regarding to consolidation of the financial statements would apply in such case. Since Indian company has acquired all shares of another company, aren't its financial statements required to be consolidated? And gathering further insight, it became clear to him that financial statements of Indian company are required to be consolidated as it has a wholly owned subsidiary now. He had another recurring anxiety in his mind whether foreign subsidiaries are covered within the scope of consolidated financial statements. Question. Exhaustive reading of India's 110 on consolidated financial statements came into his help. Audit it became clear to him that parent consolidated financial statements should consolidate all subsidiaries, domestic as well as foreign company. The management of the company was informed to prepare groundwork for the preparation of consolidated financial statements in accordance with the statutory provision and applicable accounting standards. Within the consolidated financial statements, management was catched in dilemma. The financial statements were going to be consolidated for the first time. However, the Indian parent company had acquired all shares in foreign subsidiary in the month of June. The question arose as to from which date consolidation is required. It is required for the whole year or from the date of acquiring the shares in a foreign subsidiary. The management turned to India's 110 for help. It becomes clear that results of the operations of the subsidiary are included in consolidated financial statement from the date on which the parent gained control of the subsidiary. The consolidated financial statements were made by a management by combining like items of assets, liabilities, income, and expenses of the parent with that a foreign subsidiary. There was no minority interest involved. While auditing such group financial statements prepared by the management, it came to the it came to the it came to the fore that accounts of foreign subsidiary were unaudited. CA Vikram was catched in a CA Vikram was catched in a catch 22 situation. How should he proceed? What are the implications for unaudited accounts of component included in group financial statements? What considerations would play in such case? Dear friends, we'll elaborate step by step. Basically, here talking about India's 110 consolidation. The consolidation speaks about where the moment you crossed 51% holding in another subsidiary, another company, that will become a subsidiary, and then you need to prepare consolidation financial statements. Now, consolidated financial statements are the financial statements of group in which the assets and liability, equity, income, expenses, and cash flow of the parent and subsidiaries are presented as those of single economic entity. In other words, consolidated financial statements present the financial position of an entire group, including the parent and its group companies, whereas separate financial statements present the financial position of a single entity for which the financial statements are prepared. Consolidated financial statements provide complete overview of the operations and profitability of the entire group, which controlled by the parent. Financial statements of parent company MNO Limited, consolidated financial statements of group, financial statements of the subsidiaries ABC Limited and XYZ Limited. Now, in the above diagram, there is a one parent company MNO Limited having two subsidiaries ABC Limited and XYZ Limited. The auditor of MNO Limited is SS Maheshwari and Co, while the auditor of ABC Limited and XYZ Limited is RT and Associates. Further, it was decided that SS Maheshwari and Co will act as the principal auditor, and then it was decided that SS Maheshwari and Co will act as the principal auditor with reporting responsibilities with respect to the consolidated financial statement of the group. Now, the, now, now the management. Now the management of all three companies is responsible preparation of their respective standalone financial statements. Now, the management of all three companies is responsible for preparation of their respective standalone financial statements, which shall then be audited by the respective auditor. Therefore, the parent company shall prepare the consolidated financial statement for the group once the consolidated financial statements are prepared in such a financial statements are audited by the principal auditor. Now we need to now we need to consider the following points. Now, we need to consider the following points. The responsibility of the parent company in consolidation financial statements, 𝒚 Limited. Manner of permanent adjustments and current period consolidated adjustment. The principal auditor produce SS Maheshwari and Co. Coordination and division of responsibility between both the auditors. Reporting requirements. Consolidated financial statements are presented to the extent possible in the same format as adopted by the parent for its separate financial statements. The format for preparation of a balance sheet statement of audit and profit and loss account of a change in equity, if applicable, are prescribed under the Schedule 3 of the Companies Act 2013. Consolidated financial statements include consolidated balance sheet, consolidated statement of profit and loss account, consolidated cash flow statement, consolidated statement of changes in equity, if applicable, and any explanatory notes annexed to or forming part thereof. An entity which prepare the consolidated financial statements either under any law or regulation governing the entity or sumoto might be required or otherwise engage the auditor for conducting the audit of consolidated financial statements. However, a law or regulation governing the entity may require the consolidated financial statements to be audited by the statutory auditor of the entity. The auditor who audits standalone financial statements of the entity. The guidance note audit of consolidated financial statements providing guidance on specific issues and audit procedures to be applied in an audit of consolidated financial statements. The guidance note can also be used while auditing consolidated financial statement prepared for its special purpose to the extent applicable, but it does not include with accounting matters arising on consolidation of the financial statements. Accounting Standard 21 Consolidated Financial Statements and Indian Accounting Standard Ind AS 110 Consolidated Financial Statements by Consolidated Financial Statements according to Standard 21 Consolidated Financial Statements and Indian Accounting Standards 110 consolidated financial statements laid down principles and procedures and preparation and presentation of the consolidated financial statements under Ind AS. Responsibility of the other words wherever Accounting Standard 21, Ind AS 110, consolidated financial statements lay down the principal procedures for preparation and presentation of the consolidated financial statement and NDAs and AS and NDAs respectively. In other words, whenever a parent decides to or is required to prepare and present consolidated financial statements, it include it should do so in accordance with the requirement of the applicable accounting standards under the relevant financial reporting framework. Consolidated financial statements mandatory for Companies Act 2013. Accounting standard according to section 129 subsection 3 of the Companies Act 2013, underline, according to section 129 subsection 3 of the Companies Act 2013, where company has one or more subsidiaries including associated company and joint venture, it shall be in addition to its own financial statement prepare consolidated financial statements. The company and all of the subsidiaries are the same from the manner of the its own. Further, Section 129 subsection 4 of the said Act provides that the provisions applicable to the preparation, adoption, and audit of the financial statement of the holding company shall mutatis mutandis also apply to consolidated financial statement. The consolidated financial statement shall also be approved by the board of the directors before they are signed on behalf of the board, along with the standalone financial statements, and shall also be laid before the annual general meeting annual general meeting of the consolidated financial statement shall also be approved by the board of directors before they are signed on behalf of the board, along with its standalone financial statements, and shall also be laid before the annual general meeting of the company, along with the laying of its standalone financial statements. The company shall also attach, along with the financial statement, a separate statement of content with the silent features of the financial statements of its subsidiary form AOC 1. According to the company's accounts rules 2014, the consolidation of the financial statements of the company shall be made in accordance with the provisions of the Schedule 3 of the Act and the applicable accounting standards. However, a company which is not required to prepare consolidated financial statements under the accounting standard, it shall be sufficient if the company complies the provisions of the consolidated financial statements provided in Schedule 3 of the Act. However, the requirement related to preparation consolidation financial statements shall not apply to a company if it meets the following conditions: wholly owned subsidiary or partially owned subsidiary, another company, and uh, all other members, including those not otherwise entitled to vote, having been intimated. in writing and for which the proof of delivery of such intimation is available with the company, do not object to the company not presenting consolidated financial statements. It is a company whose securities are not listed or are not in the process of listing on any stock exchange, whether in India or outside India, and its ultimate or any intermediate holding company files consolidated financial statements with the registrar which are in compliance with the applicable accounting standards. As per subsection 6 of the 129 of the Companies Act 2013, the central government may on its own or an applicability by class of companies by notifications exempt any classes of companies from applying with any of the requirement under section 129 of the rules made thereunder. It is a considered necessary to grant such exemption in the public interest, and such any exemption may be granted either unconditionally or subject to such conditions as may be specified in the notification. Thus, the companies having subsidiaries which have previously never prepared consolidated financial statement must prepare their consolidated financial statement in accordance with its mandatory requirement. This will provide the holding company stakeholders more transparency. Further, okay, 2 minutes అయిపోవాలా? Further, an investment entity need not to prepare consolidated financial statement. It is requiring in accordance with the paragraph 31 of the NDS 110 to measure all its subsidiaries at fair value through profit or loss. A parent shall determine whether it is an investment entity. An investment entity is an entity that obtain the funds from one more person investors for the purpose of providing those investors investment management service. Commit to its investors that it is a business proposed to invest funds solely for return from capital appreciation, investment income, or both, and measures and evaluates the performance of the substantially all of its investment in for fair value basis. However, as per the paragraph 33 of NDS 110, the parent of investment entity shall consolidate all entities of its control, including those controlled through an investment entity subsidiary, unless the parent itself is an investment entity. Dear friends, we'll connect later. Thank you. Thank you.